Hi everybody, welcome back. Today we are going to talk about very small businesses that haven't made the leap to QuickBooks yet. So we're going to talk about what to be keeping track of, some ideas of ways to be keeping track of it, and how to provide that information to your accountant at tax time. We'll be looking at some templates that we like to use here in our firm, and they will be linked in the description below if you would like access to those. So first, let's talk about a few best practices when you're running a small business. First, most important, have a separate bank account for tracking income and expenses for this activity. Don't intermingle your funds between your personal account and your business activities. Have that separate business bank account. Have a separate card that you're using exclusively for the business if possible. It doesn't necessarily need to be a business credit card, but if it's used exclusively for the business, it's going to be much easier for you to keep track of your transactions. With that, anytime that you go to pay for something, have that conversation with yourself about, is this purchase to benefit my business, to run my business? If so, generally that business debit card or credit card is the one that you should be paying with. Keep your receipts. Digital is fine, but make sure that however you're storing your receipts, that you can retrieve them 3 or 4 years from now, and that they're backed up. So if there's a catastrophe, a hard drive failure, a house fire, you have a copy of them somewhere else. We tend to use Dropbox because it saves it out in the cloud, but just make sure you have a copy. Make sure you can retrieve them later. If you get audited by Washington State or by the IRS, it's going to take a few years for that to happen, so you need to be able to retrieve several years worth of information. So what to track? Income and expenses, of course. I'm going to show you one of the ways that we do that. Here's a simple spreadsheet that we often share, and again is linked below. It's just a spreadsheet. It's just for listing, who paid you and how much. You can put as many lines as you need to, and there is a line for the date as well. And then also for all of your expenses. So you can put in the date and that you paid Office Depot $120 for something. So it's just a way to list all of your transactions by category. So in this particular spreadsheet, we have pre-entered categories for equipment, office expenses, office supplies, your tolls, ferry fees, car rental, meals, which are treated a little bit separately than most things. Advertising. We have a mileage item here. This one's doing math using the standard mileage rate, but we'll talk about mileage more in a minute. Business utilities, cell phone, so really anything that you're using, your insurance for your business, those sorts of things. The categories can change. They can be something that's meaningful for you, but the point is to group like expenses together and have totals. When I build spreadsheets, I like to put totals up at the top so that no matter how many lines you need, we can always find the totals up at the top. So we'll talk about mileage again. Definitely use an app. It's the easiest way to go. We tend to recommend MileIQ just because it's been around for a long time. But whatever app you decide to use, it will generally track your driving as you just go about your day. And then it relies on you to log in and swipe whether or not these drives were business drives or personal drives. We recommend going in and making sure to do that on a regular basis. Sometimes they stop tracking and you don't notice if you don't go in to do that categorization. Also, when you go in to do that, have it send you your data for the year to date periodically. Like I said, MileIQ's been around a long time. I don't expect that they're going to go under, but early on in the app development days, we certainly had clients that relied on that data to be within the app, and then the data disappeared. So make sure it's exporting data to you to keep and hang on to with your tax records periodically throughout the year. A spreadsheet's okay for mileage. You just need to be keeping track of the date and where you went, why it was a business drive, how many miles. The one thing to be sure to jot down December 31st every year is your total odometer for each vehicle. The IRS asks for 2 different mileage numbers, 3 if you're commuting, but your total number of business miles and your total miles driven on the car for the year. So having that annual odometer reading kind of lets you know this is how many miles you drove total, and then if you have your business miles, you're good to go. But both important. The other thing to keep track of are your home office expenses. So if you are using space in your home regularly and exclusively for your business, we'll want at tax time your total utilities for the year. So water, garbage, electricity, gas, all of those things that you're paying on a monthly basis for your home, HOA dues, your annual insurance for the house, all of those things count in that home office deduction. So keep track of those. Those are generally things that you are not paying for through your business account. So how to get that information to your accountant? In most cases, they will accept a spreadsheet like this. The template that we use does roll up into a profit and loss, which is handy. Generally, accountants don't want all of the detailed transactions unless there are nice totals. So keep that in mind. This year, what we are going to be doing is asking for these forms to be filled out. So if you are not on QuickBooks and you are not providing us a profit and loss out of QuickBooks or equivalent system, we're going to ask for this worksheet to be prepared instead. So I'll give you a rundown of what that asks for. It just asks basically for your name, the name of the business, because a lot of business owners have multiple different things that they're doing. The business address only if it's different from your home address, but it is helpful to know if you live in Linwood but you're working in Seattle, that's helpful. And the tax return does ask where you're operating your business from. For income, it can be just one line item. You can just put in what your total income was for the year, that's fine. But if you have multiple sources of income and you want to list them separately, totally fine too. For expenses, I know it shows just one line initially, but it does have a list of different categories that might be relevant for you. So you might have your advertising, and then, I don't know, you may be paying contractors to do some work for you. And it will total these things up, and it will be using categories that are meaningful to your tax accountant, to us. You can also just start typing something. So if there's something that you don't see a category for, you can just type in a description and include the amount, and we'll ask you questions about it. Large asset purchases, so if you pay more than $2,500 for something, we need a little bit more information about that something that you bought. It could be a car, it could be a computer, any of those things. Put in the description when you bought it, how much it cost, and we'll make sure it gets in there. The last thing on this particular worksheet is just your estimated tax payments. So if you use QuickBooks, that information may very well be in your QuickBooks file, so we don't ask it separately on the next spreadsheet I'm going to show you. But for this one, it does ask for your estimated payments. So if you have been paying the IRS estimated payments throughout the year, please do confirm how much you paid and when. Those dates are usually April 15th, June 15th, September 15th, and January 15th for that year. So this is the information that we ask from you if you are in this small business not in QuickBooks category. If you are in QuickBooks, we have a worksheet for you too. This is for both. And this one really is just to capture a few pieces of information. One is if you needed 1099s to be issued. So if you paid a service provider or a landlord over $600 during the calendar year, you may be required to do a 1099 for them. You need to get a W-9 from them in order to determine whether or not you're required to. And so these couple of first questions are just asking you to be thoughtful about who you paid last year, if you might be required to issue some 1099s, and to let us know if you need help with that. The next section is about vehicles. We want to be able to capture that mileage information that we asked you for. If you purchased a new car, a little bit of information about that. For mileage, again, like we talked about, we need to know how many business miles you drove, but also how many total miles, so how many personal miles you drove during the year. Very important for the IRS. So a couple of questions about the car. You can add an extra vehicle if you need to. And then there's a section for your home office as well. And similarly, if you moved and have more than one home office for the year, you can add a second section for that as well. But we're asking some of the things that the IRS does ask us to confirm: that the space was regularly for business, exclusively for business, what the square footage was that you're using for business versus the total. If we have been doing your tax return for years before, we may just ask to confirm what it was before, but we do appreciate you just reaffirming this information is accurate. And then asking for those expenses, those home office expenses we just talked about. So the utilities, insurance, rent, mortgage interest, and property taxes we'll get off of the 1098 from the mortgage company. But if you're renting, we need that, and repairs and maintenance. So add those expenses in, and then we'll make sure to get those deductions in for you. So just a little bit of streamlining and organizing the way that we retrieve that information to help eliminate some confusion, I hope. But definitely let us know if you have questions. So the last question that I have to tackle today is, when or why would I move to QuickBooks rather than just continuing on this spreadsheet method? And there are a couple of places that that really make sense for that. One is if you need to invoice customers and be able to keep track of how much they owe you. QuickBooks does that. If you would find value in being able to report your profit and loss every month and see what your trends are and be able to actively manage your business. If you're bringing in enough particularly variable income that adjusting your estimated tax planning every quarter is valuable, we really want to have that QuickBooks file to be able to run those profit and losses month over month. And then if you really don't want to manually enter all of your transactions, I mean, QuickBooks automatically pulls those transactions in. All you have to do is double check the categories and accept them. On our service packages, we reconcile it. You just have to do the categorization. So QuickBooks is really that next step up for you're running a business and you need better information in order to do that. If you are just a consultant or something and you're just receiving income, you don't really have a lot of expenses, there's not variability, I can see sticking with the spreadsheet method, but the more complex your situation, the more that you're going to want a more robust system, and the sooner the better. You don't want to wait until you're too busy to learn something new. So let me know if I missed any questions. If you have ideas for things that we should tackle in a future video, definitely let me know. Subscribe so you don't miss the next one, and we'll see you next week. Bye.